One thing I need you guys to understand is this. Can you guys hear me? I'm back. I'm seriously battling with service. Seriously battling with service. So now, Samuel, you're welcome. Now, I want us to understand something. I said something in trading the forex market. You need to have at the back of your mind the life, death, timing, and the lifespan. These are the core things you need to know whenever you are trading the forex market, even whenever you are even analyzing. The life simply means the bet of that particular trend you are taking, the bet of that particular trade you are taking, like buying or selling, the bet, when did they start from? That is what you want to know. That is what you want to see. Now, having known the debt, the next thing you want to look out for is what? The debt. When is this particular trade going to expire? When I mean expire, the target, where is it going to? Where is the target zone for this particular trade? The next thing you want to check out for is the lifespan. And I said the lifespan happens to deal with the market structure. We don't know what lifespan is. The number of days or the number of years or the number of times something lasts. So you want to know the lifespan. And how can you know the lifespan of that particular trend? It's the market structure. When you look at the market structure tells you that, okay, this particular trade is still alive. You can still take this trade. You can still enter from this trade. That is what the market structure does. And that is why it is tagged the lifespan. Now, the second thing you need to understand, which is the last thing I'm talking about now, is the timing. Timing is very much important. Can you guys hear me, please?
Yes.
All right.
We can hear you, sir.
All right. The timing, like I said, is very important. And that is what we are going to be talking about today. Now, what does timing does? Timing does two particular functions. And the timing, like I said, is the multiple time frame sequence. The multiple time frame sequence. Okay, somewhere. All right, the multiple time frame sequence. Now, the timing deals with the multiple time frame sequence, and it performs one solid function. And what is that function? The confirmation. The confirmation. That is what the timing does. Time is the ultimate confirmation you need for a trade. On this my particular methodology, timing, you have to master multiple time frame sequence. So many things dwells on it, based on it. Whenever your monthly is the main time frame, your daily is the primary, and your entry is 1 hour. Hope you people have watched the last video on multiple time frame analysis I sent on YouTube.
Yes.
Good. So I'm sure I don't have a problem with that. Now, the next thing is the what? The timing. And I said when monthly is the main time frame, when monthly is the main time frame, your primary is the daily, then your entry is the 1 hour. What do they do? Multiple time frame. They confirm. They are the ultimate confirmation you need. And where are you confirming this thing? Two places. For breakout, when we get to how to spot breakout and fake out, you'll be able to see exactly what I'm talking about. Timing confirms your breakouts. The reason why we have fake out most times is simply because many people, it's simply because the breakout is not coming at the right time. The breakout is not coming at the right time. You are either looking at the wrong time frame for the breakout. You might be looking at 1 hour time frame as the main time frame, whereas daily is the main time frame. And when price breaks out from the 1 hour time frame, you take your trade, and at the end of the day, price reversed and you're being lost. That is not what you want to do. And that is why you need to understand the time in multiple time frame analysis. Now, after that, the next thing you need to understand is your divergence. And I showed you examples of how timing works with divergence. on our last video based on divergence. Now, one thing we will now do today, I will show you my screen. I will share my screen with you guys, and we will now go down to our charts, so we'll be able to see so many practicals. Please, I hope you people have a lot of questions to ask me. I'm dying to know you have questions, because I've been offline for some days now, and you people have been reading, I believe so. So I need your questions. So start sending them as a chat or as a message on the chat, so I can start taking them, please. I need your message. Should we make use of crash? I said crash. Should we make use of indices for the analysis, or should we make use of forex?
Forex.
Forex.
Forex, right? All right, now. Let me share the screen. I'm coming in. All right, very quickly, can you see my screen now?
Yes.
Yes.
You can see my screen now, right?
Yes.
Yes.
Good. Now, let us now go deeply into timing. Now, this is our chart. Now, to make this clear, I want us to see the difference. How many of you have experienced a situation whereby you are spotting divergence on a particular time frame, but it took so long before that divergence could play out? Like price, if for example you want to buy and you saw divergence, but price kept on selling, and you are saying, but there's divergence, price did not buy. How many of you have seen something like that? How many of us have experienced something like that?
Level never reach that.
No, be say level reach. You people have not done your full back testing and full research. Emmanuel, how far have you seen something like that?
Yes, my brother, and he's not funny.
Good. Engineer, I hope you've seen something like that.
I've not, sir.
All right, so we're looking at that reason. I call it the time and price theory. Time and price theory. It is a situation whereby price happens to be in a dead zone. And what is a dead zone? A dead zone is a zone whereas the market has already hit the target for that particular time. So it is now in a dead zone whereby it can drop or it can keep on going up. But the problem is you don't know what is going to happen next. It's just floating around that area. That is a dead zone, a zone whereas market has already hit the target, but because of you don't know what to do next, you don't know where the market is going to next. Market is supposed to reverse from that place, but it did not reverse. So you just stay out of the trade and look at the market. Now, that time and price theory happens around that place. Now, let me add my MACD so we'll be able to see something now. I need a very big example. Good. Now, look at this. Look at this. Are you seeing what happened here? Look at our divergence started from here, way back from this place, even to this low on 1 hour time frame here. Can you see my trend line?
Yeah.
Good. Now, the divergence started from here down to this zone. Can you see?
Yes.
Now, all of us, we assume that, okay, price has formed divergence. So what we'll be seeing next is what? it shoot up. We want to buy. Since there's a divergence, we want to buy up. Since there's divergence, let us buy up. But look at what happened there. It took price how many days? Over 1 month and 2 weeks. That means 6 weeks. But no, it's not 42. Let me check. Let me use the daily time frame to see. All right, it took price how many days? See from here. It took the price 18 days. 18 days before price could do what? Move up to this zone. From this low to this zone. It took it 18 days. 18 solid days. Now, somebody will ask, why didn't this divergence played out? It is because of what? This simple thing I talked about at the beginning of this class. And what is that? The life. This is the start point of the cell. We already know that what? This is the depth where we are opening the price with what? End. Now, the only reason we have made this thing stretched out, this is supposed to be the dead zone. The only reason that make price continue dropping down to this zone is because of what? The time and price theory. It is now a dead zone. Now, if you look at this place, we have a divergence here. Remember I said something. Life, death, lifespan. I've already even seen the answer. Okay, life, death. What is the next thing? Life, death. What is the next thing?
Lifespan.
Good, the lifespan. Now, it is that lifespan that made price stretch down to this zone. That is why, and how do we do it? The same confirmation we use for divergence. The same confirmation we use for divergence. That is what we are going to use here. And what happened? If you look at it, this was our market structure zone here. At this point, market dropped down to this low. Went, created another high here. It did not break this market structure. Are you seeing it? It's dropped low again.
Yes.
This is now our market structure level. What happened? It came up to this place. It still did not break market structure. It went higher again. It still did not break market structure. And that's how we are seeing this drop here. Are you seeing it?
Yes.
Now, if you look at it, this divergence is still not respected. You get the point?
Following.
It's still not respected. Now, let's take this particular one again. Let's take this. Let me look for another wider one for 4 hours, the one that really worked out. All right, this is it. Now, guys, whenever we have a 4-hour primary time frame, what will be our main time frame?
Weekly.
Good. Now, this is a 4-hour move. This is a, I don't come out. Can I see that back? Okay, this is a 4-hour move. This here is a 4-hour move. Are you seeing it? Now,
Yeah.
Mr. Femi, you asked me a question in our last class. You said, how did I know that is that is the next moving average level? And I told you it's my system. I know because I have done so many of this thing on it, right?
Yes.
Good. Now, it is very simple. knowing fully well that this is a 4-hour divergence.
Yeah.
Anytime your divergence is the live, your 4-hour divergence, which happens to be the live, the starting point of the market, the debt is always the week. The debt is always the weekly time frame moving average.
Okay.
Now, this zone is the weekly time frame moving average. This particular zone. Yeah, this is where the weekly time frame moving average comes. Now, let's go to the weekly. You will see. Can you see that it's the weekly time frame moving average? Did you see it?
Okay.
Can you see it now?
Yeah.
Good. Now, let's go back to 4 hours and let's see what happened. Now, in these 4 hours, this 4-hour trade we are looking at right here, there's a divergence from here to this point, right? We have divergence from here to here, first of all.
Yeah.
But what happened? Price is supposed to drop down to the weekly time frame target, right?
Yeah.
But it did not. Why didn't the price drop down? Price did not drop down simply because there is no break of the market structure, which is the lifespan. This is where the market structure is. This is our market structure level. But we don't have a break below it. Can you see?
Okay.
What happened? Markets keep on going higher. And we have higher price here. Look at it. Higher price here also. What happened? Market did not still break our market structure level. Are you seeing it?
Yeah. Yeah.
Okay, so what happened? Markets continue going higher. Our divergence still remain intact. Market goes up,
Yeah.
divergence remain intact. Now, what happened? Market structure was broken here at this zone. This was our market structure level. Now, this is where timing come into place. At the end of the week, our rules of divergence, what happened? Do we have the close below our market structure? Can you see weekly close below the market structure? Did you get the point?
Yeah.
And price drops to the weekly time frame market structure, moving average level. Are you seeing it?
Yeah.
So if you go back to back test, you will see this over and over and over and over again. It happens every time in the charts. The second thing I want us to know about is what? Is breakouts. Let me just say it here. Let me talk about it today. When we get there fully, you will understand more. Now, a breakout. A breakout. Trying to look for a good example. A good scenario. Good. Good. I've seen something good. Now look at this particular place. Look at this particular area. Yeah. Yeah. Look at this particular bullish bar you are seeing. Is this not a good breakout? Is this bar not a good breakout? This particular bullish bar, is it not a good breakout zone?
Yeah.
Please, can you change that into candlesticks?
Sorry, sir. Is that not a good breakout?
Yeah.
It's a good breakout, right? Look at it now. Even for trend line, say if it breaks the trend line, Abi.
Yeah.
And it closed above the moving average now.
It moves above the moving average. Fine. But why the price drops?
I think most time is after break of structure, there will be a retest.
After the break of structure, there will be a retest. Now, there's a retest truly, but this is not a retest. This is not a retest. It is because this place actually is a breakout zone. And that was why we saw price drops. If it happens to be a retest, it will have shoot up. It will have shoot up to this area. Are you seeing it? And remember our rules for candlestick, change of momentum. Look at it took, hey, I just say one kind of English, I know like, what is it took? Okay. It took price 3 days to drop down to this zone. But look at it, it's taking price 1, 2, 3, 4, 5, 5 days to cover the length of just one bar inside that 3 bar. Are you getting it? Do you guys get what I just finished saying? Did you get it?
Well, following.
It took the price 5 good days to overwhelm the just one bar, a day bar. So bullish for 5 days could not overcome one bearish bar. And that was why you are seeing what? That drop. If it's like a breakout and a retest, like you said, Emmanuel, we are supposed to see price after touching this moving average level, go back up to this zone. Do you get the point?
Yes, that means the movement should look just like the break of structure, like there should be momentum.
Yeah, there should be momentum to the upside, right?
Pushing up.
Look at this particular
Not all those
zone.
small candles that is there.
Good. Now let's see this one. Let's look at this one. Now let's assume this is a support resistance zone. Do you see the breakout? This is the breakout bar, this bullish bar. Have you seen it? This is another breakout bar here. This particular bar. Have you seen it?
Yeah.
Look at price drops. Immediately the buyers took it back up. Fast. They know they don't even waste time. You see the momentum. It went up again. Sellers dragged it down, wasting their time. But what happened to buyers? Buyers push it up fastly. Can you see the momentum, the speed they use in moving? Are you hearing me, Emmanuel?
Yes, you can see.
Yes, sir.
Good. Now you can see the momentum they use, but the momentum was not here at all. It was so dull here, and that was why we have price shooting up. Sorry, dropping here. Now back to our reason for analyzing this particular aspect of the market. This is not a breakout bar. Why? Because the actual time frame that is the main time frame here is the weekly. Can you see? Can you see that at the end of the week it forms what? I'm back. Can you guys hear me now?
Yes, we can hear you.
Please make me the host back so I can continue screen sharing. All right, now let's go back. Now, looking at it from here, the daily time frame, like I said, this is not a breakout. Why? This is not a breakout. Why? Because the main time frame here is the weekly. And if you look at it, let me now clear everything. Come down to the weekly, you will realize that we have what? Areas of weeks here. This is also a key level area. We discussed about that.
So your this thing, I can't see your screen. We're still sharing.
My screen is still sharing.
Okay, I'm just seeing it now.
All right. Now, this is a weak area. This is still an area of what? Resistance. Now, in this particular daily time frame, look at what happened. Price shoots up to this particular level. Price shoots up to this particular level, making us assume that we have a what? A breakout from the what? Double bottom. That we have a double bottom breakout. Are you seeing it?
Yes.
Now, we will assume that this is a double bottom breakout. But at the end of the day, it wasn't. Because of what? The main time frame controls the market. And the main time frame is the weekly. And that was why we have a what? A fake out instead. And price drops. You get the point?
But you're looking at daily and weekly.
Yeah, I'm looking at daily and weekly.
Is it
Now,
not daily and monthly?
no. I understand the daily and weekly. I'm not looking for the what I'm currently looking for now is the main time frame. You understand?
Okay.
When you are looking for the main time frame, it has nothing to do with the time frame sequence.
Okay.
It is only when you have your main time frame, then you will not input your time frame sequence.
Okay.
Now, looking at this particular top, this also is a breakout. This particular bar here is a breakout. This bar, right? Do you agree with me? But why did price drop down? Why? If you come back down here, you will realize that what? It is the monthly that is reacting. It's reacting to the monthly. Can you see? It's reacting to the monthly. And where is the monthly? It was actually reacting to this monthly resistance here. Can you see what I'm saying? Are we there? Are we there?
I'm following
Are
you.
we there? Thank you.
I'm following you.
Good.
I'm following.
Let me even see if people have questions. Okay. What are the criteria or rules to follow in order to ascertain that a particular time frame is the main time frame? This is my challenge. Yeah, it's precious. It will always be your challenge, but with time, it will no longer be a challenge. So what will happen is this: when we get there to the main time frame, I don't want to say it here right now. I want us to, I'll make a video on that, upload, then people will watch, understand. Then I won't tolerate on that day, everybody will not ask question. If everybody do not have a question on that day, I will not start that class on main time frame because it is very important. There are two things that are key in this methodology: the main time, the knowing your main time frame, and understanding timing. If you can understand these two, you can do anything to any market. You can create your own strategy. You can look into the market and create your own strategy because you understand timing and you understand the main time frame. Market structure is something that you cannot just, yeah, the rules, the market structure is not something, the market structure is something that you can just understand on your own. But my main time frame and timing is very, very difficult. So please focus more on them, learn them very well. Now, Mr. Femi, I assume the rules for trading breakout to be explained in the breakout video. Yeah. Yes, I will explain them very well. I will explain that. I'll make a video for it. I will explain them very well. So, whenever you are using your multiple time frame, let me even go down to 1 minute. Let's just pray to load. Now, if the main 1 minute time frame is our entry time frame, what will be the primary time frame? Are we there? Are we there? Are we there?
We are there.
Good. Now I said if the 1 minute is your entry time frame, what will be your primary time frame?
15 minutes.
Good. Now we want to take price from 1 minute today to wherever it is now. Then we'll round up for this class. Now let's look at what happened here. Price form a divergence. Are you seeing the divergence? On 1 minute time frame. This is divergence. It even went further and still give us another divergence here. This is where I'm looking at. Yeah. And yeah. Now what happened? This two top, this two top, this two top also give us a divergence. Are you seeing it? Now, according to divergence rule, what are we waiting for? We are waiting for a break of what? 1 minute market structure, right? At the end of what? 15 minutes time frame, right? So give us the 15 minutes time frame targets. And this is it. This is where we have the close. Can you see the close below it? Yeah. The close below 1 minute market structure. Now, price went higher. Price went higher. Yeah. Price drops. Now, price came back up to this zone where it touches the moving average of the 15 minutes. Now, what I want us to do is I want us to check the 15 minutes moving average. You will notice that at every point where price touches the 15 minutes moving average, yeah, you will go to the 1 minute time frame. You will notice that there is a divergence there. Now, let's go to 1 minute again. You will notice your divergence. Look at this zone here.